Hi, this is Jim Cramer from TheStreet.com. I'm with Visesh Kumar, who knows more about the internet than anybody. Visesh, I rated over the weekend, and I've been worried myself. I deal with a lot of bears. Everything's economically sensitive in the end, other than healthcare. Couldn't Google be part of a major slowdown of spending on advertising?
Yeah, well, the economic sensitivity there is key, and in every recession since the 1950s, the proportion that advertisers spend on direct mail has increased, and that rate of acceleration has increased in the last 5 of the 9 recessions. So we have to see how this would impact paid search, which is a very close analog of direct spending. And the data that we're seeing is that Google came out last week and said that spending is up 90%, clicks in the financial arena are up 66%, tracking ahead of other categories by a lot. So I think we're looking pretty good.
Now, one of the things that always surprises me, I tell people this, is that Google's really barely up year over year. Is that shrinking multiple? Because with interest rates going down, you should be able to pay more for high quality growth.
Absolutely. This company goes through very long innovation cycles, and they kind of take their time about it. And we saw this happen a couple of years ago too, but you're seeing them pushing into mobile, you're seeing them launching new graphical ad categories. So when they do start moving, when they do start crushing the numbers, I think good things can happen.
Well, let's talk about the win. One of the things that I've been feeling about Google is that it'll have this great revenue growth, but things don't fall to the bottom line. These initiatives and changes that you're talking about, will they actually be reflected, or is it going to be overwhelmed by hiring and expense again?
Okay, so let's break that into 2 questions. First, are we actually seeing these innovations move up that revenue per search number?
Right.
And they launched Universal Search a little while ago, and we have data by Hitwise, a great research firm. Number 1, confirming the ComScore data that their search market share is growing. But number 2, saying that Universal Search is moving that RPS number up, because now you have video results and map results that are more monetizable that are thrown into the same category. So we're starting to see this stuff hit the bottom line now.
Now, is there any possibility that Google is going to become more like other companies in terms of being able to model? I've always felt that Google is unmodelable. Is that because of the old CFO, maybe we can get something that will make it less of a surprise each quarter?
Yeah, as this grows into as big of a story as it is, and if you look at the charts, it is becoming more and more modelable. It's not as volatile as it used to be. And with this next quarter coming up, keep in mind this is a company that's been very hesitant to give numbers.
Right.
This is the first time they are worried about the perception out there that this mortgage thing is going to hit them. So this is the first read that we're having where they're saying, no, actually things are okay. So I think if you look at this, if you extrapolate this to the next quarter, there's very good reason to say that hiring isn't going to be a big problem.
One last question. Stock hits a 52-week high last week. Is that a function of high growth stocks hitting a 52-week high because Apple and research promotion is, or is it a function of some of the stuff that you're talking about starting to filter through the numbers?
I think it's both. I think obviously people are paying for quality growth. I think once they're not jilted by what happened last quarter, once you see them hit these next quarter numbers very well, keep a rein on hiring, we're going to see much better stuff ahead.
Excellent. That's Jim Cramer here with Visesh Kumar on what I think is a very accurate and very exciting depiction of what's happening with Google behind the scenes about why it's hitting a 52-week high.